This is Ag Matters PM from the Iowa Agribusiness Radio Network, your daily recap of the information that affects Iowa's farmers, producers, and consumers right here in the heart of the heartland. With reports from our award-winning team of Dustin Hoffman, Riley Smith, and Mark Magnuson. Now, from the IARN studios in Des Moines, here's Mark Magnuson.
Hello and welcome into Ag Matters PM on the Iowa Agribusiness Radio Network. I'm Mark Magnuson. Today is Thursday, November 20th, 2025, and we're so glad you can join us for today's show. In today's episode, I will be joined by Kaden Sweeney of agmarket.net for our closing market coverage. But first, it is my discussion with the president and CEO of the Renewable Fuels Association, Geoff Cooper, from the NAFB convention in Kansas City. Mark Magnuson for the Iowa Agribusiness Radio Network, and I'm joined today by Geoff Cooper. He is the president and CEO of the Renewable Fuels Association, and we are here at the National Association of Farm Broadcasting Convention in Kansas City. And Geoff, I know you're a frequent visitor to the convention, and it's a great time to get your message out because you're talking to farm broadcasters all day long, I'm sure.
It really is. This is one of our favorite events of the year because it gives us a great opportunity to talk about our priorities and what's happening in our industry, and we know that what we talk about is going to get heard by a lot of folks.
And speaking of those priorities, I think right there at the top of the list for you, probably that year-round E15 legislative solution. And I've been, I listened to Senator Grassley's weekly conference call that he has each and every week. And he was making the point here recently that he's still struggling to kind of see that where the hurdle is, because you think back to President Biden's administration issuing the waivers for the year-round E15 at times, and then President Trump now following up with the same thing. It seems like everyone is kind of on board. We just need to get across the finish line, don't we?
That's exactly what's happening. Is there's not a lot of opposition to the year-round E15 legislation that's been introduced in Congress. It really comes down to finding a vehicle, finding an opportunity to move that legislation. Congress isn't passing a lot of bills these days. They're just coming out of a shutdown. So there are not a lot of opportunities to get legislation done and across the goal line. That's been the biggest hurdle that we've been facing. But there is a lot of support, both sides of the aisle. It's bipartisan. We have the support of the Trump administration. So we're very hopeful that here in the last few weeks of the year and maybe into January, there's going to be an opportunity to move that legislation, get it across the goal line, and get that hurdle out of the way once and for all.
And I guess that brings me to my next point, next question, which is that a priority then, do you think, for the current administration, getting that year-round E15 fix?
It is. We've heard loud and clear from the Trump administration that they want to get this done. They're tired of talking about it. They see significant benefits to having year-round E15, not only for farmers, but also for consumers. They understand that E15 is the lowest cost fuel available where it's being offered. They're worried about affordability and the high cost of living right now, and they understand that E15 can help address that, while at the same time helping farmers out who are facing, as you know, some tough times in farm country.
And farmers say it all the time. They want those markets. They want that market access to be able to market their product. They don't want to just get a handout by any means. So where would that fit in when it comes to year-round E15? How much are we looking at in the boost that it would be to farmers?
Well, there's a tremendous opportunity to boost demand for farmers through year-round E15. If E15 entirely replaced gasoline across the country, that would create new demand for about 5 or 6 billion gallons of ethanol, which means another 2 or 2.5 billion bushels of corn demand, which we know is sorely needed today. Farmers are wrapping up a record harvest. We know the crop coming in this year is the largest it's ever been. And you're right, farmers are looking for new market opportunities, new demand opportunities, and a home for that increased productivity. We know American farmers are the best in the world at what they do. That productivity is going to continue to increase. So, our job in the ethanol industry is to help find a home for that increased production.
So right now as it stands, you mentioned that it's been difficult to find the vehicle to get E15 legislation included into. Where do you look at right now as that next best chance?
Well, we think there are going to be a few legislative packages that are going to move by the end of the year. There's a lot of talk about what's called a minibus that might address some healthcare legislation and some other issues. That could create an opportunity for us to slide that E15 language in there. There's also still some talk about a potential emergency farm aid package. So those are both potential vehicles. And then we know if we miss out on those or if those don't come together, the end of January, there's going to be another continuing resolution. There's the potential for another shutdown at the end of January unless Congress passes a spending bill. So we think, at bare minimum, we're going to have that opportunity at the end of January to address this, if not before that.
And then, Geoff, for the one question I have for small refinery exemptions, something that if you don't follow this day to day, probably is pretty deep in the weeds for our listeners. So for those listeners, what would be the best way to explain what's happening right now with those small refinery exemptions and how that relates to all of the rules in terms of blending?
Yeah. So maybe the simplest way to explain it is every year EPA sets renewable fuel standards, which is essentially the required volume of biofuels that must be blended. And unfortunately, what we've seen very recently is EPA is exempting certain refineries from those requirements and essentially erasing their obligation to blend renewable fuels. So we've been suggesting that, hey, if you're going to allow those small refineries not to blend ethanol and biodiesel, renewable diesel, you need to take those obligations that they would have had and add those back to the obligations for larger refiners and make sure that the volumes that were finalized and specified by EPA are truly enforced.
And right now, as it stands with SREs, what is the next thing to figure out with the small refinery exemptions? Where are we kind of still questioning things a little bit?
Well, yeah, the big question now is, will EPA reallocate those exempted volumes? They've already issued exemptions to, dozens of refineries. So the big question is, are they going to take that exempted volume and add it back to the RFS requirements for 2026 and 2027? We think we should have some answers on that in early 2026.
Geoff Cooper, President and CEO of the Renewable Fuels Association. Geoff, is there anything else you'd like to let our Iowa viewers know about when it comes to what you're working on or just anything in the ethanol industry that has your attention right now?
I guess the only other thing I'd say, Mark, is we've got an incredibly bright future in the ethanol industry. We are expecting record production this year, about 16.4 billion gallons. Got strong demand, especially in the export market. So if we can get over some of these hurdles that we've been talking about, we think the sky is the limit for ethanol.
Geoff, thanks so much for the time here today and have a great rest of the NAFB convention.
All right, thanks, Mark.
Thank you to Geoff Cooper of the Renewable Fuels Association for joining the show today. And it is time now for our closing markets. I'm joined by Kaden Sweeney of agmarket.net. Kaden, what happened in the trade in the grains today?
Yeah, unfortunately, not a real fun day to talk about. We're continuing to see some weakness here on Thursday after yesterday's pretty similar market. Just giving back some of the gains that we've been taking up over the last few weeks. Really, outside markets, the stock market was up pretty strong early and gave back a lot of it on weaker jobs report, and just seemed like a kind of a risk-off day. Followed then from then on. So, corn down 3 or 4 here this afternoon, being somewhere 12 to 14 down as well. So getting close to hopefully catching some support based on moving averages. But again, weaker market here the last couple of days, giving back some of what we've gained.
And Kaden, when we think about that price movement for the soybeans here, is when we think back to when this movement initially started, how much actual price movement have we made in the ag marketplace when you think back to that very first starting point, basically when we had the hint of the trade framework agreement with China?
Yeah, so that Sunday night open, the China news kind of came out on a Sunday. So the Sunday night open, we gapped higher by quite a bit and kind of gapped up, depending on what month you're looking at, somewhere in that 1060, 1070 range. And then the high that we posted on Monday this week was roughly 1150s up to 1160 or so, again, depending on what month you're looking at. So, we realized basically 90 cents of a rally, real close to $1 over that time frame. We're going to close here today somewhere around 1120, 1130, 1122 on the Jan. So, again, giving back some of that off the high, certainly. But again, off of Friday's WASI, we were down hard. We took it all back Monday. We've kind of grinded back lower again, but I just am not of the opinion yet that anything is broken. Not that this market needs to continue to scream higher, but I don't think you can say for sure yet that we've seen a high and we're going back down. I think to this point, we're still just trading and still giving some of it back. But I think, there's still some upside potential for sure.
What happened on the trade for the livestock side today?
Yeah, livestock unfortunately lower again as well. Especially on the cattle side, feeders continue taking it on the chin. We've stabilized a bit versus where we were just free falling there up 2-3 weeks ago off of President Trump's comments. We've stabilized a bit, but we are still down in the downtrend, continuing to getting close to making new lows. So fat cattle down today. About $1.60 and feeders down $5. So again, just continuing to see that slide. These hogs are up about 60 cents today, but really the pattern is still the same where we're continuing to see a downward slide a little bit at a time. And so I just don't know that you can feel great about that until, you see something maybe from a news standpoint to really pop in here and give us, something to break that downtrend. But until that happens, I just don't know that you feel great about where things lie across all the livestock for right now.
He's Kaden Sweeney of agmarket.net, my guest here today. What is the best way for our listeners to get in touch for more marketing information?
Yes, sir. Just go to our website, agmarket.net. You can reach anyone from our team from there, get on a 30-day trial of all of our intel and also get signed up for a conference in Nashville coming up first weekend in February. Going to be a good time. Always a big crowd there. We're expecting an even bigger one this year.
Kaden, thanks so much for the time. Always appreciate it, and have a great rest of your day.
Sounds good, man. Appreciate you guys.
Thank you to Kaden Sweeney of agmarket.net for our closing market coverage. Let's take a look at the closing market numbers. You can find that information anytime under the Markets tab of our website at iowaagnet.com. December corn closes down 3 1/4 at 426.5. January soybeans down 13 3/4 at 1122.5. December soybean meal down 4.90 at 314 even. December soybean oil down 44 cents at 50.66. Chicago wheat down 9 3/4 at 527. Minneapolis wheat down 8 cents at 573. Kansas City hard red wheat down 9 1/4 at 506 1/4. December oats down 5 3/4 at 305 3/4. On the Merc, December live cattle down $1.58 at 214.73. January feeder cattle down $5.08 at 316.38. December lean hogs up 63 cents at 79.48. December pork cutout unchanged at 93.58. Class 3 milk closes down 31 cents at 16.32. That does it for our closing market coverage and brings us to the end of today's show. You can find all of our content on our website, including our daily Iowa Ag News stories and all of our podcasts at iowaagnet.com. From the NAFB convention in Kansas City at the Westin Hotel, I'm Mark Magnuson. For Dustin and Riley, you've been watching Ag Matters PM.